up? Good morning, everyone. I am the Data Lord. This is Crypto and Coffee here on Decentralized TV. And Friday. How you doing? Show's starting soon. Nah, dog, it's right now. What did I hear? I mean, I need to turn up for what? How y'all doing, man? We got Gundy. What's up, boy? I see you. Yo. We got Indo. What's up, DCTV Bams? DCA Friday, as the boy says. We got Boston. What's up, brother? Faithful and true. Happy Friday to you. And little question from Indo here. Y'all think we might see the market dip some more? Well, I think we have some hints as to what's going to happen next. Thinking that. Yo, what's up? Codebug. I see you, brother. By the way, I want to tell you a little story about this coffee mug here. It's pretty funny. So, a long time ago, I was a little system administrator, and I was cleaning out this server closet, and I found like 2 IT guys ago. They left this like coffee mug in the server closet next to like this keyboard for setting up servers, and it had just been there for a long time. So I was like, my cup now. So it's little Starbucks cups, but I like that it's all. So that's a stupid story about my favorite coffee cup. Now you know. Now you just know. Ooh. So let's get into a little looky at the markets, because we've had some waves going on. I think that's a good thing. Personally, I like surfing, so let's check it out. So we got man, I need to change the background. Hold up. You know how it is. So just bossy, I see you, girl. Good morning to you. So let us take a look. So Litecoin, we've been talking about Litecoin. Let's talk about Litecoin some more. So you see this big old wedgie we're in? This big old wedge. Boop, boop, boop. We have double supports here. So we're just rocking and rolling inside of that. And I hope you notice right now, we're outside of that boundary. That's a good thing. It means it's underpriced. The only reason alts snapped lower than their trajectories was because Bitcoin snapped lower than its trajectories, which was because the Fed rate hikes came out, which functionally caused people just to throw a bunch of money into the stock market. And, a lot of stocks were pumping. Additionally, I think people see a lot of the regulatory uncertainty inside of crypto. And so they're like, okay, look, if you're going to be whaling on Coinbase, if you're going to be whaling on Binance, maybe we'll move our money into stable coins, get that off the exchange or something, get it into our own accounts, and we'll wait to buy back in once we have certainty that it's chill. Now, of course, those aren't long-term crypto hodlers. Those are people who are just trying to get rich, investor portfolio type people. That's cool. I mean, no disrespect to what they do. They raise the tide that raises our ship, so that's cool. If they want to get out and give us some cheaper Bitcoin prices, I'm down. So, and cheaper alts. So looking at Bitcoin, here's a little Bitcoin going on. We're still in this like downward wedge right here. It hasn't bit yet, right? And I think it's cool that we struck down, to whatever the frick what the number is right there. 20. What was it? It was like just below 24, I think, or just below 25 and into 24 on some exchanges, depending which one you looked at. But I think that's the point, right? We're in this wedge here. It's tightening up. We're gonna see it probably snap with some clarity. So DCA Friday, DCA today is not a bad move. It's going to feel pretty good, locking in prices around here. And mind you, like zoom out to like the weekly, right? Let's look at the weekly. And Also, I will give Jaime the chance if he's available to kick it. I don't know if he is. We'll see. We'll see. Maybe, maybe. How's everyone doing this Friday though? Hope this week was cool. I mean, for me, I'm got so much stuff to do, dude. But like, I look forward to the weekends because I can finally like get some of my normal stuff done. But yeah, we got in the weekly view. Like, dude, this is juicy. I don't know if you're seeing that. Like yeah, you're probably not gonna be locking in 15K Bitcoin, but yo, if we can lock in sub 25 Bitcoin, that ain't shabby either, man. Yeah, busy week, hard workout this morning, ready for the weekend. Nice, dude. Get it. So, Dogecoin, I also want us just to pay attention to that. Doge is like a nice buy right now. So I'm not saying it's not going lower. I am saying it's at support. Like, this is weekly. This is weekly, homie. Look at that. We are at this little wad over here. That's our support. Like, we are at it. So I'm just don't sleep on the Doge is, I guess, my point, right? Like, don't you do it. We got some opportunities to get into Doge. So my recommendation is if you want altcoins and whatnot, just look at things that have popped off over and over and over again. You can usually get a good feel for what's likely to pop off again. And I think that the fact that Elon has kind of tied Twitter's success and his you know personal call outs to the price of Dogecoin, it makes that one a pretty fun gamble to at least have a pocket of. So that's what I'm doing. That's what I'm doing. Let's see. Let's take a look at the general markets, though. Make sure this is friggy freshed. There you go. So, Bitcoin, 25K. Yeah, we did see it go lower, barely dipping into 24K on some exchanges. It's a good thing. It's up a little bit this morning because of our headline news, but we'll talk about that later. Ethereum, 1.8, just copying Bitcoin's success, I think is what that is. And then Litecoin up 2%. So I think this is good that after a big bleed out day, Litecoin has a green, Bitcoin has a green, Ethereum has a green, Dogecoin's a little bit green. And those are really the coins that I'm personally paying attention to. Monero is not really one that I tend to trade. Reason being, check this out. It doesn't pump very often. It's pretty stable. And why? If you haven't heard of Monero is basically a very, very private Bitcoin. As you can see, like, these aren't huge moves, right? Like, when it does move from like that to there, like, yeah, that's a 70% move, but over what time frame, right? And typically it's following the success of the rest of the market. So don't sleep on Monero. It's a good idea to look into it, but it's not as straightforward to trade as maybe Bitcoin might be. So, but they know. So let us get into the stories for the day. So you're going to start hearing a lot about ETF, and some people may not be familiar with what an ETF is, and we're gonna make sure you're all educated. You got your Bitcoin PhD, right? You got your investor PhD. My PhD, I can't come up with a clever acronym, but I mean, some guy on the internet told me about it. But his name's Data Lord, so that's cool. So what is an exchange traded fund? Let's read about it. So, as we explained in the previous article, the world's largest asset management firm is ready to launch its ETF on Bitcoin. The registration of the ETF has already been filed with the Securities and Exchange Commission. We've already done an analysis of it regarding its potential impact on crypto ecosystem. So what is it, and how does BlackRock Bitcoin ETF work? So to understand a Bitcoin ETF, let's first define what an ETF is in general. An ETF is an exchange traded fund similar to a stock. It is designed to track the performance of a particular asset or group of assets, such as stocks, bonds, commodities, or currencies. ETFs offer investors the opportunity to gain exposure to their assets without having to own them directly. So, a Bitcoin ETF operates on the same principle but focuses exclusively on Bitcoin as the underlying asset. It allows investors to gain exposure to BTC price movements without having to directly own the cryptocurrency. In essence, a Bitcoin ETF holds Bitcoin on behalf of investors and issues shares that represent the value of the Bitcoin held. One of the significant advantages of a Bitcoin ETF is its accessibility to a wider range of investors. Unlike buying Bitcoin directly, which requires technical knowledge, does it? Or you could just hang out here and you'd know. And the creation of a digital wallet, so hard. Investing in a digital ETF is as simple as buying shares through a traditional brokerage account, which you're also going to have technical knowledge to be able to set up. And you're also going to have to set up an account number, aka a digital wallet. So, yeah, it's not that different. This ease of access reduces barriers to entry and allows investors who may be hesitant to navigate the complexities of cryptocurrency exchanges to participate in the potential benefits of Bitcoin's growth. Homie. I know all the crypto heads are like, hold up, bro. What? Like, yeah. So a Bitcoin ETF offers investors the ability to trade Bitcoin on regulated exchanges. I mean, I guess if that's what you want, adding a level of security and oversight that is absent from many cryptocurrency exchanges. I mean, maybe centralized exchanges, yeah. This regulatory framework offers investors a sense of trust and protection as their investments are subject to established rules and protections. So let's break this down. And Briggs, I feel what you're saying. It's poop. And also, what's up? Good morning. So like the whole point of Bitcoin, right? The whole reason it has value is its self custody element. If it wasn't properly decentralized in power, it would not be a valuable asset because it would just be a really high hash rate, insecure platform, right? But it's a really high hash rate, secure platform that's decentralized power, and because of that, that's why people see it as valuable. So that also being said, I have talked to a lot of people who are just one, not in the space, two, a lot of times they're older. They have like a really big trust in traditional investments and investment systems, regulatory systems like the SEC, like um, you know, Klaus Schwab, Edward Jones, that type of thing. And I don't fault them because I think that there's value in some of that. But I do think it's an issue when you're taking an asset like Bitcoin and you're pretending that it's valuable to you and you don't have keys, right? I think people are going to make some money off this. I think it's going to end up raising the tide of Bitcoin. But my concern here is it's functionally going to facilitate really, really large aggregations of Bitcoin. Like some companies are going to have, like BlackRock, they're going to have way more Bitcoin than most other people, and they're going to be able to whale the price. And that concerns me. But I do think if you are a long-term crypto guy or gal, you should pay attention to the fact that you can buy, Bitcoin when it goes low. Just buy that dip, baby. Buy that dip with a tater chip and scoop it. And I think we will end up having more and more dominance as well, being people who just don't throw our investments away, right? But this is a big deal because I can reassure you, if there was an ETF, uh, that would force the hand of regulatory clarity. That'd be one of the mechanisms that would force it, because now you have big players like, BlackRock, um, that are moving a lot of money, and the U.S. has a lot of, I shouldn't say the U.S., that the regulators have a lot of interest in BlackRock doing well, and so they're probably going to get out of the way. That's what I'm seeing happening, right? Um, and we got a full house today, so I want to say thanks to everyone who's shown up to the stream. We do this Monday, Wednesday, Friday, every morning. Monday, Wednesday, Friday, from 9 Eastern till about 10 Eastern. So we hanging out though. We drink about coffee, we talk about crypto, and you're always going to be most informed when you're chilling on this channel. We do a really solid job of just combing through all the news and giving you, like, here's the TLDR. Here's the stuff that, like, actually matters, not the noise. Here's the real, right? And I've been in crypto for a long, time. I've been heavily involved since 2016, and I've been doing computer architecture for a long time too. So, I got that whole technical background, and I've worked with entrepreneurs a whole lot, and CEOs and CTOs, that type of thing. And so I've gotten cheek to cheek with a lot of people who understand business in a much wider context. And so I'm bringing that perspective onto all those conversations we're having, so that you can be well informed, not fall for FUD traps, and be able to maximize your crypto holdings over time. So yeah, and you spelled dirty shovel wrong, but I like that spelling, dirty. And you might wonder, what is dirty shovel gang? Well, early on this year, we were talking about how if you have your crypto in self custody, you're going to be able to properly defend that, right? Like, if someone wants to steal your stuff, they're not just going to hack you on the computer. Like, they literally have to come and fight you with a dirty shovel, and you're going to smack them upside the face like little Nicky, So that's what dirty shovel gang is. It's all about being in self custody. So let's keep reading here. The different steps for creating a Bitcoin ETF. So the creation and management of a Bitcoin ETF involves several key players. First, an asset management firm or financial institution proposes the creation of a Bitcoin ETF to regulatory bodies such as the SEC in the United States. The proposal must meet certain criteria and undergo a rigorous review process before receiving approval. So my question is, like, how long is that going to take? A rigorous review process? Like, is that like years, man? Is that like months? Is that? I don't know. Once approved, the asset management company works with custodians who are responsible for the custody of Bitcoin on behalf of the ETF. The custody ensures the custody of the Bitcoin and implements robust security measures to protect it from loss or theft. And mind you, the loss or theft is so that they don't lose their money, not so that the investors don't lose theirs, right? This partnership adds an additional layer of trust for investors who don't own anything, who know that their Bitcoins are in the hands of experienced and trustworthy custodians. When investors buy shares in a Bitcoin ETF, the asset management company buys Bitcoin on the open market and holds it in reserve. The number of shares issued by the ETF corresponds to the amount of Bitcoin held, ensuring that each share represents a specific fraction of total Bitcoin held. As the price of Bitcoin fluctuates, the value of each share also changes, allowing investors to gain or lose based on performance of Bitcoin. A diversified level of investment. So a Bitcoin ETF offers a level of diversification within a traditional investment portfolio. So by including Bitcoin as an asset class through an ETF, investors can balance risk and potentially improve their overall returns. And trust me, they're gonna, right? If you got something representing the price action of Bitcoin, and let's say you've been working hard, you're doing company contributions for your 401ks, whatever, you're sitting on, you know, properly, a million, 3, 4, 5, 7, 12 million, and that's pretty common. And then they're throwing chunks of that into Bitcoin. That's going to make the Bitcoin price get goofy quick, dude. So you should be drooling over this 25K because, move that comma a few places over, and that's the numbers we might be looking at, right? So another advantage of Bitcoin ETF is the ability to leverage existing investment strategies and instruments, meaning 401ks, Roth IRAs, kind of thing. Traditional investment strategies such as dollar cost averaging, and we do that here on Fridays, dollar cost average, DCA Friday, or rebalancing can also be applied to Bitcoin ETFs. Investors can take advantage of systematic investment plans in which they invest a fixed amount at regular intervals, reducing the impact of short-term price volatility and potentially benefiting from long-term appreciation. In addition, a Bitcoin ETF can act as a bridge between the traditional financial system and the cryptocurrency world. It allows institutional investors who may have regulatory constraints or risk management requirements to gain exposure to Bitcoin in an environment familiar to them. This bridge can facilitate the integration of cryptocurrencies into the mainstream finance and pave the way for further innovation and adoption. So here's the potential disadvantages of Bitcoin ETFs, right? However, it is essential to recognize the potential disadvantages and risks associated with the Bitcoin ETF. Investing in a Bitcoin ETF does not guarantee direct ownership of the underlying Bitcoin. That's what I was saying, right? Like not your keys, not your cheese, baby. Investors rely on the asset management company and custodians to hold and manage Bitcoin on their behalf. What have we learned, children? Although measures have been taken to ensure security, there's still an element of trust. There's a huge element of trust. In addition, regulatory decisions and changes in the legal landscape surrounding cryptocurrencies may impact the viability of Bitcoin ETFs. Regulatory bodies may impose restrictions or introduce new requirements that affect the operations and availability of these investment vehicles. Investors should keep, I hate that word, man, abreast. Let's keep the boobies out of this one. Investors should keep up to speed with regulatory environment and consider the potential implications of their investment strategy. In conclusion, a Bitcoin ETF offers investors the opportunity to gain exposure to Bitcoin price movements through a regulated and accessible investment vehicle. It eliminates the need to directly own Bitcoin, which that's the point, bro. That's the point. It's like having Lamborghini stocks. It's like, yeah, but you don't drive the Lambo. What are you doing? Like, and provides liquidity and convenience through trading on traditional stock exchanges. However, investors should carefully assess risks and consider their investment objectives, risk tolerance, and familiarity with the cryptocurrency market before getting whaled on in a Bitcoin ETF. I added that last part, investing in a Bitcoin ETF. So that's like the high level view of a Bitcoin ETF, dude. Like the whole point of Bitcoin is you're holding self custody, right? Whole point is no middleman, peer to peer, cash, right? I can send money directly to who I want to send to. There's no person in the middle. That's the entire point of this. The censorship resistance, the whole privacy matter, the pseudo anonymity, like that's what makes this asset valuable. It's not just digital gold. I actually don't like it when people say that because I'm like, is it though? Like, it's better than gold, bro. Like, you kidding? And yeah, I mean, here you can pay a portion of the sandwich so you can look at it. You don't own the sandwich and you can't eat it. It's just like that, dude. It's poker chips. Yeah. So, no disrespect to the ETF because it's going to bring money into our space, but I'm certainly not going to recommend anyone. Like when people start asking me like, yo, it's a Bitcoin ETF, should I get into that? I'm like, no, you should do some clever things to get more money and buy more Bitcoin. That's what you should do. That is what you should do. Not investment advice, but internet guy's opinion. So our next article here, should we get into that one? Should we get into that one? Yeah, we'll just yeet into this. We'll just yeet into it. Yeet. There we go. BlackRock applies for spot Bitcoin ETF, a U.S. first if approved. So this is the context of that last heads up article, right? The investment firm joins a long line of applicants. ARK is among those still waiting to hear from the SEC, and Grayscale has appealed its rejection. Well, look at that. This guy is raising his paper with the Bitcoin logo to the sky. He means it. Means it. BlackRock has filed an application for a Bitcoin spot exchange traded fund, or ETF. The investment company is the world's largest and would be the first crypto spot ETF in the United States if it receives approval. According to a filing by NASDAQ stock exchanges with the U.S. Securities and Exchange Commission, Coinbase Custody Trust Company. That doesn't sound good. Coinbase Custody Trust Company. They need to come up with a more zingy name. Would be the custodian of the fund's Bitcoin holdings. Oh, okay. Check this. So, according to the filing on the NASDAQ, the SEC, Coinbase is going to be the custody for this ETF. So that's super huge for Coinbase, but they got to get through this legal shit right now. So, and the Bank of New York Mellon, or Malone, or however you pronounce that, or Spanish Mellon, would custody its fiat. BlackRock's iShare Bitcoin Trust will be traded as commodity-based trust shares. Okay. According to the application filed on June 15th, the shares have been designed to remove the obstacles represented by the complexities and operational burdens involved in direct investment in Bitcoin. The Bitcoin price will be updated at least every 15 seconds during regular market trading using the CF benchmark index. Actually, that's good. BlackRock's ETF filing is live and it's spot, meaning spot price, right? All the other Bitcoin things are like, you can, like Marathon, for example, things like Riot. You can basically, or Grayscale, you could buy like their shares, and based on generally how they're doing, because of the Bitcoin price and when they're taking profits and whatever, like that's what the price would be. But this is actually way more true to form. The document notes that previously approved spot exchange traded products in the commodities and currency markets are generally unregulated, and the commission relied on the underlying futures market as the basis for approving trust shares in the past. Thus, as such, the regulated market of significant size test does not require that the spot Bitcoin market be regulated in order for the commission to approve this proposal. The SEC has not approved a spot Bitcoin ETF so far, despite numerous applicants. Grayscale took the SEC to appeals court to argue for the soundness of the Bitcoin futures after the SEC rejected its application to create a spot Bitcoin ETF. Kathy Woods, ARK Invest, and European investment firm 21 Shares have also been pressing for spot Bitcoin ETF approval, filing their third application in April. The world's first spot traded Bitcoin ETF was Canada's Purpose Bitcoin ETF, set up in early 2021. So this is big news, dude. Like, this is big money legit coming into the Bitcoin ecosystem. Yet the SEC is going after Coinbase. I know we are getting smoke from Canada fires, but geez, yeah. So my recommendation here is to not get freaked out, but to not compromise self custody. Don't do it. You want to stack up as much Bitcoin as you can in self custody, and make sure your OPSEC is tight, right? Like, make sure you have all your private keys sorted out properly. It's in waterproof containment. It's in fireproof containment. It's in a secure location. you don't have all of it in that one location. You maybe got another. That's how you make sure no matter what comes down the pipe, you're going to be okay, financially speaking, at least. Bitcoin can't protect you against biologically engineered viruses and stuff, but maybe it could if you can buy the right serums or whatever. But next article here: how American courts have become central to crypto law. So to date, none of the 30 plus crypto bills in Congress have become law. So judges are stepping up to fill the void. What does this mean for crypto in America? That's a super good question, right? Over the past year, blockchain technologies have experienced a surge in news and developments, from notable events such as Sam Bankman-Fried's arrest to the U.S. Securities and Exchange Commission's recent lawsuit against Binance and Coinbase. This new frontier has been a buzz with activity. I've never seen that as like a describer, a buzz. But despite the many momentous, let me say this like Leonardo DiCaprio. But despite the many momentous events, regulatory progress in the United States has been sluggish. That's my Wolf of Wall Street. And federal agencies have relied instead on regulation by enforcement, to the displeasure of many companies that deal with digital assets. Europe, in contrast, is already implementing comprehensive regulations for digital assets, underscoring the need for the United States to catch up. The U.S. judicial system is thus having to step up to interpret digital assets within the existing laws, ensuring the country remains relevant to the global legal landscape. So the role of the executive branch. The U.S. executive branch has yet to adopt a definitive stance on digital assets and appears to be relying on Congress to take the lead. In March 2022, President Biden issued an executive order titled Ensuring Responsible Development of Digital Assets, emphasizing collaboration among government agencies to identify risks and establish a framework for safe and responsible development. Okay. The U.S. Financial Stability Oversight Council reports on digital asset financial stability risks and regulations. That's quite a mouthful. That's what she said. Generated as a result of the executive order, pleads for regulatory clarity and for enforcement of the existing regulatory structure. The council's report also calls for steps to stop regulatory arbitrage and the passage of legislation, but provides little guidance for activities related to digital assets. So basically, they're trying to get the government in between you and your Bitcoin, is what this sounds like, under the guise of being safe and responsible, right? Like, anytime the government says we're going to keep you safe, it means we're going to control you. That's functionally what's happening here, right? Like, hey, I'm trying to keep you safe. You can't go past the sidewalk around the corner. It's like, I'm an adult. I can go where I'd like to. Thank you. Like, yeah, but it's dangerous if I can't see you. It's like, I don't need you to protect me. I'm okay. Thank you, though. Thank you, though. I know karate. Thank you very much. The U.S. Financial Stability Oversight Council report on digital asset and financial stability risks and regulations generated as a result of the executive order pleads for regulatory clarity and for the enforcement of the existing regulatory structure. The council's report also calls for steps to stop regulatory arbitrage and the passage of legislation, but provides little guidance for activities related to digital assets. The U.S. Congress has conducted extensive hearings on digital assets, inviting key figures from legal, business, and regulatory sectors and not listening to them. I added that part. Notably, recent hearings with the chairs of the Securities and Exchange and Commodities Future Trading Commission have shed light on the diverse opinions surrounding cryptocurrencies and highlighted the legislative gridlock. But to date, none of the 30 plus proposed bills relating to digital assets have advanced beyond the introductory phase, and Congress has yet to pass any substantial legislation in this area. Political considerations combined with concerns over high profile incidents and negative headlines have further complicated the issue. Despite ongoing efforts to gather information, the legislative branch has been hesitant to take concrete action. And so Europe is filling the gap. In contrast to the United States, the European Union has taken long strides towards regulating digital assets. With its extensive coverage, the EU's markets in crypto assets, or MiCA regulation establishes a comprehensive framework that includes defining digital assets, imposing license requirements, and outlining regulatory obligations for market participants. Notably, the regulation also tackles crucial issues such as anti-money laundering and counter-terrorist financing measures. I mean, real quick, crucial issues such as anti-money laundering. Okay. If you have an inflationary currency like the US dollar, to me, if you're printing money whenever you need it and there's nothing backing it, how is that not laundering? Like, I don't understand. I guess by mere definition of it's approved, and counter-terrorist financing measures. So to define that too, this is a buzzword. I think that's thrown around a lot. Counter-terrorist. What we found, at least in the United States, is after George Bush kicked out the Patriot Act, a terrorist is defined as anyone who does something the U.S. government doesn't like. Really, like you're a terrorist if you're doing something they don't like. That's what functionally makes you. And if you're not a specific sovereign nation, right? If you're a private person doing something they don't like, or a private group doing something they don't like, they call you a terrorist so that they can crank up the heat to 10 on you and say that we were fighting terrorism. So I want to be careful with that. Like, just for example, in Canada, people were peacefully the truckers, for example, were peacefully protesting. They were simply saying, look, I want bodily autonomy. I want to be able to make whatever decisions I think is right or wrong for me. And I appreciate you advising me as to what you think I should do, but I'm going to do what I think I should do. And in all of that, anyone who was sending money to the truckers was considered a terrorist. So just because they were opposing what the government was doing. So they weren't harming people. They weren't destroying property. There's nothing terroristic about it, right? So I just want to kind of call that out, that like that is a buzzword that I think is being hyper politicized, and it's disingenuous. Now, if someone was destroying property, if someone was harming individuals who were peacefully protesting or just present in the area, that's terrorism for sure. Absolutely. If you are intimidating people because they're expressing their right to free speech, like that could possibly fall into this. But if you're simply peacefully protesting, that is not terrorism, dude. Like, pump the brakes. So anyways, after 4 years of revisions, the regulation still amounts to nearly 400 pages, while MiCA falls short in addressing key areas of digital assets such as decentralized finance and lending. Yeah, terrorize these nuts. That's funny. While MiCA falls short in addressing key areas of digital assets such as decentralized finance and lending, it sets a strong foundation for future developments, right? The growing prominence of U.S. courts in crypto laws. So as regulatory progress in the U.S. remains stagnant, the nation's courts have stepped up to interpret digital assets within the existing legal framework. Numerous cases involving digital assets have been filed in 2023 alone, many involving the SEC and the CFTC. Each regulatory agency has faced criticism from legal professionals, their respective chairs, and their federal agencies. The U.S. Chamber of Commerce recently submitted an amicus brief in Coinbase action against the SEC, claiming the agency is causing regulatory chaos. They're making us do our job. Wah. Coinbase's lawsuit requests that the SEC provide regulatory guidance concerning digital assets. The SEC responded that it is under no obligation to issue new regulations, and Coinbase has no standing to sue the agency. Coinbase's reply argues in part that the SEC is withholding regulations because it would diminish its regulation by enforcement actions. To add to the regulatory chaos, the SEC has filed lawsuits against Binance and Coinbase, two of the largest cryptocurrency exchanges in the world. The respective legal actions vary, but each contains allegations that the exchanges traded cryptocurrencies as unregulated securities, including popular cryptocurrencies such as Matic, which is Polygon's native token, or Sol, which is Solana's native token, and ADA, which is Cardano's native token. Binance and its co-founder are alleged to have commingled customers' funds. Coinbase is alleged to have facilitated crypto transactions since 2019 while evading disclosures required under securities laws. Binance and Coinbase have released statements vehemently opposing the lawsuits, setting the stage for another litigious legal battle within Coinbase. Litigious, like is that what are you saying? Legal battle within Coinbase's statement. Brian Armstrong, Coinbase CEO, stated that Congress is needed to fix the situation. I agree with Brian. I think if they're going to be gritty, they need to give us clarity. Like, okay, well, what? It's that whole like bit with Ryan Gosling. What do you want? What do you want? Oh man. So guidance from the judicial system. So in the absence of robust regulatory authority, the U.S. judicial system has provided valuable guidance in areas such as issuance, contract securities, and intellectual property related to digital assets. Noteworthy cases involving trademark and copyright law have garnered global attention, showcasing judges' roles in shaping the digital asset landscape. But court system is encountering other issues that could delay how do you pronounce that? Adjunction. I don't care. Courts have been flooded with submissions detailing why or why not digital assets should be considered securities. The delay caused by important public input is no less apparent than in the matter of SEC versus Ripple Nipple. The case began in December 2020, and approximately 130 attorneys have been involved to date. The SEC is alleging Ripple sold XRP, its native token, as unregistered securities. A dispositive motion has been pending since October 2022, and the delay with the final ruling may be understandable. The lawsuit is a decisive one, and the decision will provide the United States and the world with a boost of clarity. You know, that whole SEC thing with XRP and Ripple. So just so people know, the same group of people first launched it is a decentralized cryptocurrency called XRP. It is basically proof of stake, right? People have nodes they have to set up, but it's not proof of work. And then that same group of people made this company called Ripple and gifted themselves 80% of all of these coins. And so technically on paper, these are different entities. This is a decentralized effort. This is a company. And so on paper, this is totally legal, right? In function, were they using XRP to raise money for Ripple? Yeah. But in legal definition, separate entities. So I think they have a good case in court, even though I don't really like what they did. So a dispositive motion has been pending since October 2022, and the delay with a final ruling may be understandable. The lawsuit is a decisive one, and the decision will provide the United States and the world with a boost of clarity. Absent from the SEC's lawsuits against Coinbase and Binance were any allegations that XRP is an alleged security. This is likely a strategic move by the SEC to safeguard the agency in the event an adverse ruling is found in its lawsuit against Ripple. So that's why we talk about Ripple so much, guys. It's not because I care about Ripple. It's not because I think you should invest in Ripple. It's because Ripple has positioned itself to be a tipping point for what happens in the rest of our space, right? Like it's this funny little pocket, right? The SEC's classification of an additional 19 cryptocurrencies are as securities in the Coinbase and Binance lawsuits diminished the clarity that blockchain-based companies hoped to receive from Ripple lawsuit. Furthermore, absent legislation, the lawsuits will provide the current state of uncertainty and cause the industry to receive clarity in fragments. And so here's the takeaway: patience pays, right? So the wheel of justice turns slowly for many reasons. While courts decipher the law as it applies to crypto and digital asset companies are looking outside the United States for regulatory clarity. Unfortunately, clarity is unlikely to come to the United States before the next elections in 2024. But that does not mean the United States will fall behind. During the early stages of the internet, Europe was the first to enact data and privacy laws. Europe's first such laws came into effect in 1984, an election year in the United States. The following year, the United States passed its own Data Protection Act. Despite the delay, it clearly did not hinder the United States from retaining and being a leader in the technology or in technologies and businesses, in technology businesses. History is likely to repeat itself with respect to digital assets. There is a desire to pass regulation, but good regulations take time. I'd argue that. Good regulations are getting out of the way. It's not heavy-handed, so it doesn't take time. Waiting for the SEC could take significantly longer than for Congress to act, and regulations from an agency would likely not be as robust as more comprehensive legislation. Will Congress and its constituents continue to learn about this developing technology? It will be up to the U.S. court system to bridge current laws to digital assets while helping to navigate these uncharted legal waters. So that's the big picture, right? We're looking at crypto price action, wondering where it's going to go. We're looking at the things that are kind of in the way or things that will weigh into where the price goes. And basically, we have one, how exchanges are handled legally. So Binance and Coinbase. That's why we pay attention so much to those cases and why we paid attention so much to the FTX case, because FTX case was not really about the crypto issue. It was about a corrupt banking institution that has crypto branding on it, right? And so once that was debunked, people kind of understood, like, okay, this was an inside job. This wasn't a crypto issue. Then we got hit with, Binance getting beat up for a few different accusations, commingling funds, selling unregistered securities. And then we also saw Coinbase getting hit for unregistered securities as well. And that has to resolve. Once that resolves and this ETF matter resolves, I think people are going to have clarity as to where they can go. And, like, I just hear this out. So I've done some experiments with, like, here, let me do this. I've done some experiments with the whole staking and proof of stake cryptocurrencies, and awesome tech. I think there's a lot of value there. The issue is the majority of them are not self-custody, right? And so if it's not self-custody, like hold up, just for example, so Tezos, I can have a Tezos node. It's probably securing the network. You can still hold your own keys, and you can say, hey, I want that node specifically to stake my money. So the only risk you have is, one, that the person who's running the node is going to pay you according to pay schedule, and two, opportunity costs. That's it. Because if they don't pay you, you could have been on somewhere else where they did pay you, right? And so what we're finding is that is a non-custodial staking situation. There's a few cryptocurrencies that support that. Then there's other ones like Ethereum, which is it doesn't support that, right? Like you have to lock down 32 ETH in a node. There's no other way around it, and that's your node. And so if multiple people are like, "Yo, I want to stake my Ethereum," they have to use other things like Rocket Pool or there's other solutions. But basically saying, "Here, here's my point 0.2 ETH or whatever it is," and they can stake that, and then they get a kickback of whatever the percentages of that node is. Now that's a cool way around it. Ethereum shouldn't be forcing your hand that way. But the issue is you are locking your money in. You can't take that out. Um, and they're in custody. You don't have keys. And so that's really the issue here is that as soon as you don't have keys, it is now a security. It's a security if you don't hold the keys. Now, if you're holding the keys and I'm just hosting infrastructure and you're staking to that, totally different issue. At that point, you own your keys. I don't own your keys. You're just getting paid for helping to secure a network. Cool. That's why I'm bullish on non-custodial proof of stake, and I'm bullish on proof of work. But I'm very, very bearish on anything that is non-custodial or anything that is custodial, right? This man in the middle, I think, is the reason most of these are going to get punched in the head. So that's my take on it. Do what you're going to do. Do whatever you're going to do. And I will say we need to pay attention to this last article for the day. So Binance exits the Netherlands after... there we go. Binance exit the Netherlands after failing to acquire regulatory approval. So the Netherlands no longer has a Binance. Sorry, guys, you got to use a VPN. Binance, the world's leading cryptocurrency exchange, has announced it is leaving the Dutch market with immediate effect after failing to receive regulatory approval. Binance will no longer accept new users who reside in the Netherlands, and from July 17, existing Dutch users will only be able to withdraw assets from the platform and no further purchases, trades, or deposits permitted, according to the statement. And by the way, this happened on Binance when Binance had to make Binance US. I remember I was on Binance.com. I loved it. It was awesome. And then they kicked us out to Binance US. I was able to move my funds and whatever, but I wasn't able to put any money into Binance.com anymore. So which it was annoying because I had some miners that were mining to that location and I had to fix all that stuff. Existing Dutch residents, users are being sent an email with comprehensive information about what this means for their accounts and any assets they currently have on Binance platform, alongside any steps they would need to take, Binance said in the statement. Binance said it had been engaged in a comprehensive registration application process as virtual asset provider VASP and Dutch regulator, or with the Dutch regulator. Despite exploring various options to comply with the regulations and continue serving Dutch residents, Binance was unable to obtain a VASP registration in the country. Binance said it is already compliant with EU standards for anti-money laundering and counterterrorism financing in other EU countries where it holds registrations, including France, Italy, Spain, Poland, Sweden, and Lithuania. It is actively preparing to ensure full compliance with the new EU rules on crypto assets, or MiCA. Binance said it would continue striving to obtain authorizations to provide our products and services to users in the Netherlands. So here's the takeaway from this. Binance is going through European approvals. Some are working, some aren't. We have this whole situation with BlackRock trying to go for an ETF in the US that would functionally tip the hand of a lot of other organizations. That would also dump a lot of money into the general subtle understanding of like what an ETF is. It's not you aren't in custody of your coins here, right? And I think that whole BlackRock situation is going to lead how the general world sees legal precedent because they're going to reference the American cases. Is likely what we're going to see for money laundering as the Netherlands shuts doors on the exchange. So France is doing the investigations on that. So interesting news day. That is our show for the day, but we'll be back on Monday, 9 Eastern. I hope you have a great weekend. Until next time, do keep calm and huddle on. And don't forget to DCA. These prices, man, in the bear markets are so juicy. You just got to look at what the all-time highs are. And what if we beat those all-time highs? Like, man, that's nice. That's nicey nice. So if you have any questions, I'm active in that Discord. Go ahead and link in the description. Hit me up in the water cooler, and I'll answer your questions. So until next time, let's do a little dancing. A little shake therapy. Is that what we're going on? Mm. Mm-mm. Yeah. Have a good weekend. It's an awesome Friday, baby. My nose is itchy. Bye. By the way, I don't know that everyone has this. I have a blast moose on my desk. You have a blast moose? You should.